For a closer inspection now of today's data releases, we turn to Jerry Webman, Chief Economist and Senior Investment Officer at OppenheimerFunds, which has $188 billion under management. Jerry, always good to have you here on Fast Forward.
Glad to be here.
It doesn't seem like there was even a ray of hope in any of the data released today.
Well, I wouldn't say that. I think the industrial production numbers that showed factories continuing to produce a spike up in production of automobiles, and I think more importantly, capital goods. That's the stuff that businesses use to make other stuff, particularly electronics, telecommunications equipment, and so forth, for both domestic use and exports. That I call a ray of hope, because that has been the one part of the economy since the recovery began that's shown some maybe surprising signs of life. So it doesn't overwhelm the troubling news we got, but if that, I guess it's one of those things, if that hadn't been good, then I would be a lot more worried than I am. We're still limping along.
We're still limping along. You sound a little bit more optimistic, though, than some people. And I want to play something for you. This is S&P's John Chambers. Here's what he had to say about recession earlier today.
There's at least a 1 in 3 chance of a lowering of the rating over a 6 to 24-month time frame.
All right. What do you think? Some people saying 50% chance. Some people saying much higher.
Now, you know, there's a lot of debate now about putting percentages on recessions. And if you give me a 5-year time frame, I'll tell you it's about 100%. What we're seeing now are evidence in these forward-looking measures that are cuspy. They are close to what we would consider recessionary, troubling recessionary levels. 1 or 2 of them have been there. I think the Philadelphia Fed number is there. The national numbers aren't yet there. So they're consistent with an economy that continues to limp along. I guess that's about as optimistic as anybody's going to get. But the manufacturing sector is still there. We may be getting some stability, at least, or confidence in the European banking system from some of the actions that are taking place today. If that could begin to address confidence issues. You know, confidence among business people has been worse than what their real actions have been, interestingly enough.
The same holds true for consumers, by the way.
As well.
Let's talk quickly about next week. Given the data that came out this week, you know, Bernanke earlier in the year was talking a lot about transitory.
Yeah.
Right, that was a big word when he was talking about inflation. Do you think that's the likely rhetoric that comes out of next week's meeting?
I hope not, because I hope that Bernanke is going to be realistic about inflation having gotten to the Fed's target level, what anybody thinks is tolerable. I hope he remembers, you know, Arthur Burns' famous speech called "The Agony of the Central Banker." By the way, Bloomberg Businessweek had an excellent article about it a few weeks ago. There's a shameless plug that you didn't ask for, but there was a great article about it where he essentially said this trade-off between trying to keep the economy going, improving the labor market, and deal with inflation at the same time, it produces agony.
All right, Jerry, unfortunately, we got to leave it there, but it's always great to have you here on the show. Thanks so much for joining us.
My pleasure. Always glad to be here.
Jerry Webman of OppenheimerFunds.